Turbo Trading with head trader Robert Knight, MBA.
This is a video on the difference between, for intraday, for day trading, the difference between a pullback and a flush, and which ones to avoid and why, and which ones, to look for an entry op on them. Because the question was asked me, it was in regards to IONQ this morning. It did take a sharp run, and then had in 6 minutes it dropped $6, popped, and then off it went, traded down to as low as 28 from trading up to 35. So it's 36. So an $8 pullback. So let's chat about that. Which ones to buy and which ones to avoid. Now you have to remember that let's go back a step. Some of these, this is on an intraday basis. Look how much this thing had moved, really, from here, from 7 to $36. So when you get that amount of move, you're bound to get a sharp pullback. Now there is, and there are, I should say, traders who look for the waterfall trade where the stock sells off. They buy the dip and then sell it on the pop, and then as soon as it pops, because they know that it's not going all the way back up. But in this case, it traded from 31.5 back up to 33.5. So a nice, $2 move. You could have caught that. There is a pattern. There is people that trade that pattern. I don't try to catch a falling knife, because one thing about a falling knife is you don't know how far it's going to fall. So let's just quickly go back to the daily on this. This thing has come from 7, and it traded today to, as I said, 35.90, and in the last 2 days it's come from 20 to 35.90 in the last 3 days, now backing off. So that this stock is overextended. This was a SPAC done at 10, huge market exuberance. Who knows why it's it tripled in price? But one thing you do know for sure is that it needs to correct. It can't go straight up like this. The odd one does, but in general they don't. So he asked me, well, as this was falling off, where do you think we should look to buy this stock? And I said, you can't, because it's a flush. And so think about it this way. A lot of people, maybe they were in this in the pre-market, bought it, sold off, found some support here around 32 or so, and big volume to the upside on this. And so everybody's jumping into this to go, to take it for the run, with the view that it's going to continue to go. So now, and then it sells off very sharply. Look at the volume. So there's huge overhead for this stock now. So any kind of bounce, if you had bought this here at $36 and wrote it down to 31, and then it bounced back up and you saw it double top at 33, you're going to go, geez, I'm just happy I can get out at least with some of my, with a little bit of a loss, half as much as I would have. And that's, of course, the psychology of why stocks sell off after they bounce like this, because all the buyers here know that all the buyers up here are going to look to get out of this stock. So you have huge overhead in here now. And so it does pop, but it doesn't, we had this long wick up, next candle's red, long wick up again, candle's red. That stock's going lower. Sure enough, look, it came down to 27. Now it's breaking down to new lows again. In this case here, got up to the VWAP, failed, and now trading to, lows for the day. So there was nothing here to indicate that you should be looking to dip buy this stock, unless you know that pattern, unless that's a pattern that you're trading all the time and you're very good at it, like our good buddy Jack. But if us mere mortals, it's pretty dangerous to try to figure out where the bottom on this is. We see the same thing now. This is a little bit different. but this was the LGVN. Got into a beautiful, nice rising channel here today, which we traded it all the way up. But look at this candle here. This is your gravestone right at the top, tombstone, right at the top. Next candle's red. You need to get out of that trade. Boom, sure enough, a little bit of a flag, but you know it's going lower, and it did. Now, it did find some support in here. So this is a bit of a different pattern. There's nothing in here, though, that would have tempted me to buy this stock at this sort of support level here at the 685. I would look for it to build better support, because I know that there's a ton of buyers up here at this level that are going to be happy to get out of, or just want to get out of this trade. And so all these people that bought in here, this pop and this drop, the selling's not over. So again, I wouldn't have been looking, but here then we see it did bottom, popped up, pulled back, held the support. Now you can look to buy this stock. It did, and then it broke out of this wedge pattern like this. This is a typical A, B, C, D pattern. Here's your A, here's B, here's C where you accumulate. Broke out of that wedge, you sell half it when it gets to the all-time high of day. Let the other half run. In this case, it just coiled off, and I said, watch it for a pop and drop in here, and sure enough, it dropped and backed off. Now it is holding the support again here at the 6 1/4, which is by coincidence also close to the VWAP. So there's a different pattern in here, but when this first sold off, there's nothing in here that says I need to hold that stock. You need for the pattern to develop, pop, pull back, A, B, C, D pattern. Now, which is a bit different now than, say, this stock, which was on our watch list this morning, from last night, I mean, JWEL. We'll have a look at it. Now, this also has surged from 6 to 15. So you would expect a pullback in here, but it never flushed. It is in a rising channel here. Got into this big rising channel like this. And so you could have rode this channel up, selling when it's at the top of the channel. Then it pulled back. It did hold support on this 15-period moving average. It broke out of this channel, but in reality, all we would do, because then it bounced back up, is fan out the channel. So you'd have a new channel that looks like this. So you'd still be in this trade. So, and it keeps coming down and holding this trend line here, held the trend line, but also held the 15-period moving average. So this is not a flush. This is just an orderly pullback. And then when it got to the apex of this wedge here like this, you watch for a pop or drop, and it pops, so you can buy the stock. Away it went. There's no flush in here. I mean, this candle here did drop, but it was only 30 cents. So, 2% pullback. Then it sort of got into a sideways pattern here. But again, no real flush out. And then, I mean, here maybe you would have got stopped out because it broke down below the 50-period moving average. And, maybe in a downtrending channel. But then it started to go again. But the point is that it was in a nice rising channel, has an orderly pullback, holds the support. Here's your support in here like this. Holds the support, pops, and then at the apex of the wedge pops out. You can buy that stock. Because it doesn't have, a big, massive, spike up overhead. It just is a nice, slow, orderly move up. So that's the difference between a flush and a pullback, and why you can buy a pullback, but it's dangerous to buy the flush.
Don't forget to like and subscribe to our channel.